This portfolio of 3 dividend aristocrats will pay your rent. Still feel like your paycheck disappears the moment you pay rent and cover a few other expenses? We bet you wouldn't believe that a simple $10,000 investment could one day generate $3,200 per month in passive income, enough to cover your rent or even eliminate it completely. Sounds too good to be true, right? With the power of dividend investing and compounding, this is absolutely possible. In this video, we're diving into 3 elite dividend aristocrats. On their own, they are rock solid, but when combined into a single portfolio, they become a financial powerhouse. By the end, you'll see exactly how this portfolio can take a $10,000 investment and turn it into $3,200 per month in passive income. Ready to unlock this game-changing strategy? Let's get started. When it comes to building a passive income stream, few strategies are as reliable as investing in dividend aristocrats. These are elite companies that have consistently increased their dividends for at least 25 years. They have also proved their resilience through bull markets, recessions, and everything in between. Aside from this long track record of dividend growth, the company must also be a member of the S&P 500 and meet strict market capitalization and liquidity requirements. That means we're not talking about just any dividend-paying stocks. We're talking about some of the most stable and well-established companies in the market. Now, imagine taking just 3 of these dividend aristocrats, putting them together in equal parts, and creating a portfolio that can generate serious cash flow. Let's dive into 3 dividend aristocrats that could help you achieve exactly that. First up, HRL. Hormel Foods has been feeding families since 1891, and if you've ever had a peanut butter sandwich, a holiday ham, or even a quick and small easy meal, chances are you've had one of their products. They own some of the most well-known food brands in the world: Spam, Jennie-O Turkey, Skippy Peanut Butter, Planters Nuts, and even Holy Guacamole. From deli meats to pantry staples, they have a little something for everyone, whether it's a quick snack, a protein-packed meal, or a go-to ingredient for home cooking. What makes Hormel special isn't just the variety of products they offer, it's how essential they are. No matter what's happening in the economy, people still need to eat. That makes food companies like Hormel incredibly resilient, even during recessions. But like any major food companies, Hormel faces challenges. One big risk is the fluctuation in commodity prices, especially for pork, turkey, and beef, which can impact production costs. To manage this, Hormel uses hedging strategies to keep costs stable. Financially, Hormel has demonstrated resilience. In fiscal year 2024, they reported net sales of $11.9 billion and an operating income of $1.1 billion. These figures reflect a slight decrease in sales compared to the previous year, but it also shows an increase in operating income. This is a strong indicator for effective cost management and operational efficiency. As of February 21, 2025, Hormel's share price stands at $29.65, and notably this marked its lowest point in nearly a decade. There were definitely reasons for this, from fluctuations in commodity prices, particularly in turkey and pork, to production disruption at the Planters facility. It's no surprise that the share price was affected. But there isn't only bad news, right? For investors, Hormel is all about reliability. It's got a solid 4.11% dividend yield, and here's the kicker: it's been raising that payout every single year for 59 years, averaging 2.71% growth per year. That's the kind of consistency that makes it a true dividend aristocrat. On top of that, analysts expect the stock to deliver around 8.31% in annual returns. So when you put it all together, Hormel's long history of steady growth and shareholder rewards makes it a strong pick for anyone looking to build wealth over the long run. Now, Hormel is not the only company to watch in the food industry. Our next dividend aristocrat offers a similar but even more compelling advantage to put into our portfolio. SJM. The J.M. Smucker Company has been a staple in American kitchens for well over a century. What started in 1897 as a small business selling apple butter has transformed into a powerhouse in the food industry. What makes Smucker so special is how deeply embedded its products are in everyday life. Think about it. Whether you're starting your day with a cup of Folgers coffee, making a classic PB&J with Jif and Smucker's jam, or treating your dog to a milk bone, Smucker is right there. Their portfolio covers multiple categories, from breakfast to snacks to pet care, ensuring they stay relevant no matter the latest food trends. And that's exactly why Smucker is a consumer defensive company. People are going to buy their products no matter what's happening in the economy. Whether times are good or bad, pantry staples like these stay in demand. However, just like Hormel, operating in the food sector comes with a challenge. And that is the risk of fluctuation in commodity prices. That in turn impacts production costs. Smucker has implemented hedging strategies to manage price volatility. Financially, Smucker has shown resilience. In the fiscal year 2023, the company reported net sales of $8.18 billion, reflecting a 4.11% decrease from the previous year. Despite this, their gross profit stood at $3.12 billion, indicating effective cost management. J.M. Smucker's stock has been on a downward trend over the past year, and it's not just because of broader market conditions. A big factor was their $5.6 billion acquisition of Hostess Brands in late 2023. While this move expands their snack portfolio, investors were wary about the added debt and the challenges of integrating a major buyout. This is what led to a dip in the stock. Despite these setbacks, Smucker's strong brand lineup and long-term strategy keep it in the game. Now, let's talk numbers. Smucker is as steady as they come when it comes to dividends. Right now, it's offering a solid 4.27% yield, and it's been consistently increasing payouts at an average of 2.38% per year. But here's the exciting part. Analysts predict the stock itself has delivered an annual return of 10.18%. So it's not just about collecting dividends, there's real long-term growth potential here too. Smucker seems like the ultimate play, but there's more. Stick around to see our last pick for a foolproof portfolio. ADM, Archer Daniels Midland, or ADM, is a global powerhouse in the agricultural industry, turning crops into products that nourish and power the world. Founded in 1902, ADM has grown far beyond its origins, now operating in 6 continents, over 200 countries across North America, South America, Europe, the Middle East, Africa, and Asia Pacific. Imagine a network of more than 270 processing plants and 420 crop procurement centers worldwide. ADM sources vast amounts of corn, soybeans, and wheat, transforming them into food ingredients, animal feed, and biofuels. However, managing such a vast global operation isn't without challenges. Significant risks ADM faces are changes in supply and demand, weather events, and geopolitical tensions. These factors cause prices to swing and impact its costs and profit margins. ADM addresses this by diversifying its sourcing and maintaining a robust logistics network. ADM stock has had a bit of a rough ride over the past year, and a lot of that comes down to investor caution. Lower commodity prices, uncertainty around biofuel policies, and trade tensions have all played a role in the downturn. But here's the thing. ADM has been in this game for over a century. They've seen it all, and they know how to adapt. Their strategic moves show they're focused on pushing through these challenges and setting up for long-term stability. And when you dive into the numbers, it gets even more interesting. ADM continues to be a strong income-generating stock with a solid 4.47% dividend yield. What makes it even better is its impressive dividend growth of 8.65% per year. While the stock has faced some recent struggles, analysts estimate its annual return on share price at around 7.22%. All three are top-notch dividend aristocrats with a strong history of paying dividends, but they each bring something different to the table. Hormel and Smucker are the most reliable. People will always need their food products, no matter what's going on in the economy. That makes their dividends steady and dependable, with solid long-term growth. ADM, on the other hand, offers the highest dividend yield, but it's more of a roller coaster. Since it deals with crops and commodities, it's affected by price swings and global events, making it a bit less predictable. So what happens when we combine all three into an equal weighted portfolio? Let's break it down. This portfolio of Hormel, Smucker, and ADM really brings the best of both worlds: steady dividends and long-term growth. With a solid 4.28% dividend yield, largely thanks to ADM, you're getting strong income right from the start. On top of that, the dividends don't just stay the same, they grow at an average of 4.58% per year. And while each stock has had its ups and downs, the portfolio as a whole has delivered an impressive 8.57% annual return on share price, thanks in large part to the steady performance of Hormel and Smucker. It's a mix that not only pays you now, but also helps build real wealth for the future. Now let's talk about what that could mean for an investor. With an initial investment of $10,000, this portfolio could grow significantly over the years. After 5 years, the total value could reach around $18,500. By year 20, it could expand to $134,500, which would mean a yearly dividend income of $7,300. You can already see the power of compounding here. But if you held out for 30 years, your portfolio could grow to an impressive $579,000. Even better, you can expect a dividend income of $38,000 per year, or $3,200 monthly, enough to cover your rent. Dividend investing isn't just about collecting passive income, it's about building long-term financial security step by step. With a combination of trusted dividend aristocrats like Hormel, Smucker, and ADM, a simple $10,000 investment can become something truly life-changing. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.